Hi guys, welcome to EagleEyeFX, and in today's video we'll be looking at market review, Forex market review. So today we'll be doing it, and going forward we'll be doing it a bit more differently, whereby we'll be looking at the market with also other traders. So it will actually be sort of like a class, but it's other traders. We're looking at the markets together and stuff like that. So if you want to join, you can hit me up. It's very cheap. It's just $10, and it's almost like a mentorship program whereby we teach and also we look at the markets together. You get a chance to ask questions and maybe even to say the pair you'd like us to look at. So yeah, so if you want to join that, please hit on the link on the description below. You can reach me out on Telegram or on Instagram. So yeah, things are going to be very different going forward, so make sure you don't miss out on that. So let's get into it, and we'll just start immediately. All right, beautiful. So we are in. Okay, so definitely I want to share my watch list. I'm going to be very brief. I have a watch list here. Of course I can't trade 17 pairs, but some of these I just like putting them here so that I know the difference between what I'm doing and what I'm looking at. So then the ones that are somewhere around up here, normally out of my big watch lists, you can find that maybe I'm trading maximum 3 or 4. So I want to share this. So the first thing I look at when I'm approaching the markets, the first thing I look at is I look at the dollar index, because it normally guides me, especially in terms of especially in relation to the dollar pairs. Because one thing I've seen is that, especially like for example, now that the dollar index is what is bearish. Is it bearish? Yes, it's bearish. So you see that pairs, any pair with USD something, normally they follow the dollar index direction. It's one of the things I've observed with time. So and then also the opposite is true. So any pair that starts with XXX USD goes normally the opposite direction of the dollar index. So you see that, for example, right now, you see that right now that the dollar index is bearish. You see pairs like gold, odd USD, LSD USD. For example, like this one, you can see, you'll see that it tends to move or to show signs of moving in the opposite direction. But it doesn't mean that now you don't have to do analysis. Hey, you'll see Pepe. But if you look at something like USD ZAR, you can see that it can actually complete the move before it moves to the downside. So this is just a guide, and it's good to always observe and to know. Yeah, and this is my observation. So yeah, that's just my observation. So, and I normally use it, and it has worked for me. So I hope that is clear. So I'm gonna be very brief on some of these pairs, and then if there's any pair maybe you have it on your watch list or would like us to look at, then we'll definitely be happy to look at that. So the first pair, of course, I'm looking at is OD card. Yeah, so the reason why I'm looking for selling opportunities on this pair is because you can see that we had this triple top over there, then we have a very strong impulse move, then now we are actually on the correction. So definitely I'm looking for what? I'm looking for a continuation. This continuation can come up to here or can come all the way to that level over there. So, and also you can see a very strong all right, okay, you can see these candlesticks over here. You can see these, yeah, that's a very strong and this is 4-hour time frame. It's a very strong engulfing, if you can call it engulfing, or yes, I think it's engulfing. And also on the 1-hour time frame, based on my strategy, you can see that we have, normally I look for 3 touches. This one of the confirmation that I use is what we call the multi-touch confirmation. So I have 1, 2, 3, and also we have this 1, 2, and 3. So those are actually my confluences. These 3 touches plus these 3 touches, those are 2 confluences, plus 1, 2, 3, triple top. That's also another confluence. And also on the 4-hour time frame, there's a very big, bearish candlestick. So definitely I'm looking for what, once there's that strong impulse move, I'm looking for a correction, then continuation. So this is still consolidating. Normally for the consolidation, I'm looking for between a minimum of 6 to 8 hours, a 6 to 8 1-hour candlesticks. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have like 10. So it has been consolidating for the past 10 hours. So normally I'm looking for 6 to 8 hours 1-hour candlestick. And I like this strategy because it means that, even if you're working 8 to 5, you can be able to monitor this, because your consolidation, you have to wait it for around 6 to 8 hours, which if you had gone to work, then you've gone to work and you've already come back. So yeah, and then you can find your entries on the 1 hour. So you can see that also on the 1 hour time, on the 15 minutes time frame, you see that it also repeats itself again. We have 1, 2, and 3 multi-touch confirmation, and also there's like a small double top over here. So, well, the probable versus the possible. The probability is that, it will actually play out to the downside. And if you are trading support and resistance, you can see that if I put the line chart, you can see that the support has been broken, then the market has come to retest it almost like 2 times. So therefore we are looking to move to the downside. So that is what I'm looking at. On AUD card, I'm actually looking for selling opportunities. My stop loss is around 18.6 pips, and then that's my stop loss size. And definitely let me go back to the 1 hour time frame. I'm targeting this level here, so this it's around 7%. So I'm gonna hold this one. If it plays out, then I'll be 7% in profits. All right, any question, any contribution, they are welcome.
I have one.
Yeah.
With the strategy of Falcon, when there is a breakdown, let's say in this case, can you zoom in on that a little bit?
Can I do what?
Zoom in.
Oh, zoom in here.
Yeah. Do you usually go in after the retest, or what confirmation do you usually use to go in?
There are 2 types of confirmation. Now, with the Falcon strategy, we have 2 things. There is what we call a risk entry, and then there is what we call a reduced risk entry. So RR and RRE. So it depends. Are you going in as a risk entry, or are you going in as a reduced risk entry? Now, I'm going to explain a risk entry. So a risk entry is, for example, let me delete this and this. I'm going to bring it back. So a risk entry is, let's assume this part was not there. Maybe the whole of this part was not there. Okay. So this market was like this. Have you seen like that? So the risk entry is 1, 2, you wait for the market to come to the 3rd touch, then you enter and look for move to the downside. Okay. So that means that, let me take this one out. That means that a risk entry is, maybe you can place your sell limit over there, then place your stop loss. Maybe normally our stop loss pips is 15 pips and whatever. It doesn't go below 15 pips. Then let's say maybe you target this level. That's around 8%. So now, why is it called a risk entry? It's called a risk entry because the market could come and just continue like that before it commits. So then this becomes a risk entry, but we still enter it. You know, it can actually play out more. I mean, out of, let's say, 1 out of 5, 3 will actually play out, all right? Because it also depends with the pair, how it behaves, volatility and everything. Now, a reduced risk entry is when, for example, we have an impulse move, correction, we are waiting for a continuation. So how do you enter a reduced risk entry? Now, that is when you come here. Let's say, for example, we had this pattern over here. Let me maybe go to the 15 minutes time frame. So you've seen your structure like this, okay? So let's delete this. So remember, even if I enter here, also on top here, that's still a risk entry, all right? And why is it a risk entry? It's because it could still continue consolidating, right? It could still, you know, do this and maybe even come all the way to here before it commits. But now if you want to trade a reduced risk entry, that is when you place, you know, you wait for the market to actually break out and retest. So it means that your entry is going to be somewhere around here. Then your stop loss is going to be above the structure like that. Then once the market breaks and retests, then you enter. Or what you can do is you can actually place your sell stop here. You can place your sell stop here, place your stop loss somewhere around there. And then once this market breaks and continues, then you are in the trade. If the market comes and continues like this, then you're not triggered in. So that means that your risk has still been reduced. It will only trigger your order once it breaks and retests and just continues to the downside. So it depends with the kind of entry you are looking forward and the kind of entry you're entering. So I don't know if I've answered your question.
Yeah, that's okay.
Thank you. Yeah. So your entries matter. I mean, your entries are determined by what type of entries. Is it a risk entry or is it a reduced risk entry? For example, like on top here, how you could have entered another reduced risk entry is this structure. You can see here there's a structure forming, is it? So 2 ways. You could have entered a risk entry here, of which you could have been triggered. Let's say your stop loss around 15 pips and above, thereabout. Then you are targeting this move to the, let's say even you're targeting here 90%, that's around 8.69%, right? That is a risk entry. Let me add somebody's joining. Okay, so that's actually a risk entry. Okay, but now if you wanted to enter a reduced risk entry, then what you could have done is that you could have placed your order here. So remember, on top here is 8.69. Now you have to understand that risk entries normally come with higher risk to reward, but reduced risk entry, the risk reward is a bit reduced. So let's say you placed your sell stop over there, and then maybe reduce this to around maybe around 18 pips. Okay, so then you place it here. Of course, your stop loss is going to be above that recent highs, around 17.9 pips. Then your target is still here. So you can see that now it has moved from 8% to 6.52. So this on top here is a risk entry. At the breakout here is a reduced risk entry. Sometimes, and you can see the market is no, you can see like this one, there was not a proper retest to the downside. So if you see that also you're waiting for retest then to the downside, then you can actually miss big move, because like this one, you can see that, I mean, even if you go to the 15 minutes time frame, you can see that the retest did not come. You know how some people, they are waiting for the retest to really come to the trend line before it commits. You could have actually missed this one, but you can see that this one candlestick like this already put you inside the trade. There was a small retest, then the market just continued playing out. So that is the kind of entries that we look to in Falcon. So you ask yourself, is it a risk entry or is it a reduced risk entry? I hope it's clear.
Yeah, that's okay. Thank you.
All right. Any other question on OD card? Welcome, Forex billionaire. So we're just looking at the market, analyzing, and
sorry, I'm late.
It's okay. It's okay. It's okay. It's fine. Yeah. So I was saying that, and this AUD card, I'm actually looking to sell, to short this around 6%. And the reason why is because of, let me just go through that quickly. My confluences are 1, 2, 3. That is a triple top. Then also we have this big structure here. Just a minute. So the big structure here is this one, is this here inside here, and you can see that is also giving me 3 touches, and also inside here I also have 1, 2, and 3 touches. So those are 3 confluences. Now of course we missed this move at the beginning here, but if you go to the 4-hour time frame, you can see that there's a massive retrace candle like this, very big retrace candle. So we have an impulse move. Then of course we are looking for our first correction, then we continue to move to the downside. So on the 1-hour time frame, you see it on the 4-hour time frame, but on the 1-hour time frame you can see that we had this impulse move, correction. I'm actually looking for continuation. Then also on the 15 minutes time frame, you see the same thing. You see that we have 1, 2, and 3 touches, and also there's a small double top over there. So the probability is that, you know, this market should actually will commit itself to the downside. Remember, we also do probable versus possible. So if it commits itself, then we are looking at a possible as a possible 6.98, around 7%. Yeah, so my stop loss is just above here, around 18.6 pips. This trade, I think you can still enter it, but I don't know now how the spreads are. I don't know how right now the spread might be massive, but this is a trade that you can actually enter. Maybe place your stop loss around maybe around there. You can place it above this high, around 21 pips, or you can just reduce it a bit, 16.7. Don't let it go below 15. It's 2 whatever. Then where is our target? The target is here, the bottom of this. There are 90%, so you can see that it's around 7.5. There's not much difference. So I feel like AUD card is ripe. It's a pair that you can trade, but I don't know if entering right now it's wisdom. And I was also saying that for those who trade support and resistance, you can see that this support here has been broken out and the market has come to test it. So the support has become a resistance. Then the market is moved to the downside. Yep, that is the reason why I am looking at shorting AUD card. Any question, any contributions? You're welcome.
That setup is perfect. That setup is perfect. I like it. Yeah. The confluences are enough. There is enough confluences. Like, wow. Only that sometimes I am afraid of steep flags.
They tend not to play out.
Yeah. but sometimes steep flags, they are good still because they can still create another confirmation for you. Yeah. Like if we see that flag, it can still come and hit again the double top to come down again. Yeah, so it's still good.
You can do this.
Yes, exactly.
Come and give us a double top before.
Exactly. Yeah. Yes, exactly what I'm saying.
Yeah. And that is why risk management now comes in. So you can see that in this trade now, even if it goes that way, then you're only risking 1%.
Exactly.
So if it comes up here and it gives you a clean double top, then you can still re-enter it again. And now you have now even another confluence. You know that now it's going to commit itself.
Yes.
Yeah, and now that one separates you from somebody who is revenge trading. You know that is not revenge trading.
That is true. Yeah. But it's a very nice setup. I like it. I like it.
So for those who don't trade Falcon, you know, we trade flags.
Yes.
So once we see an impulse move and you see a flag, we are looking for continuation. So, but there are different types of flags. I mean, the flags that normally play the best are actually, you know, almost we have like flat flags like this. I mean, if you see this, you know, like for example, if you're coming from a place of like this level over here, a very high level, then they tend to commit. But now the steep flag is talking about is when the market moves this way, then the flag is kind of very steep. You know, this one normally tends to really consolidate back to where it came from to give us a double whatever before it moves to the downside. So this is a difference between let's say a flat flag, you know, and a steep flag. That's a flat flag. This one normally really commits itself. This one, it can really consolidate before it actually plays out. Let's see if we can see one. If we can see, I want to look at a high probability level. Any question as we continue, or do we continue?
We continue. Okay, sorry.
So is there a pair that you use to compare the movements, or maybe like the way you can have the dollar index for dollar pairs? Is there a currency pair that you use to get more confidence for such a pair?
No. I only use the dollar index for dollar pairs. I know there is the JPY, there is JPY index, there is I think GBP index and stuff like that, but the only one I use is the dollar index. The other ones I've never really been keen. And also the person who is also mentoring me, like my mentor, he does not look into those. He only looks at the dollar index.
Okay.
Yeah, so I also don't also bother myself with those other indexes like the JPY index and other stuff like that. Yeah.
So the US dollar determines a lot of movements in the market.
That's true. So for most of this, you said it's the low risk, isn't it? The low risk entry.
Reduced risk entry.
Yes, the reduced risk entry. So you use the tail stop, so the buy stop if it's going up.
Yes. For example, if it was if it was an impulse move, then it's correcting this way, then I'll have my buy stop here. I'll just wait for it to trigger me and just continue. Okay, sometimes it can trigger you and retest. But you know, sometimes the market can just go and not come back. For example, let me show you. There's a trade here. There's a gold trade. I did analysis for that trade, and from some funny reasons, I never entered that trade. And well, I'm happy that it played out, but I'm telling you, the kind of move that has moved, it's crazy. Let me show you this trade. This was a trade, this analysis I did, and I just let it go like that. And you can see that as we talk right now, it has actually played as we talk right now, it has actually played how many percent? 48%.
What?
48%. Now,
what a shock.
Let me show you. This was my analysis. Let me hide this. Now look at this analysis over here. So this is actually the 1 hour time frame. Okay, so well, gold did not complete this. All right, so I was actually expecting to fill this vacuum. It never filled, but now we had an impulse move, and then it was giving some level of consolidation. But I was looking at this kind of direction, and I saw some level here that actually supported this market to the upside, and that's the reason why I placed this this line over here. And now what happened? You can see that if I go to the 15 minutes time frame, this was actually a very clean flag, right? Now wait, let me just do something, just a minute. Okay, yeah, let's go to the 15 minutes time frame. So what happened? Let me lock this so it doesn't disappear. Okay, yeah. Now what happened here is, well, this market was actually consolidating here. Yeah, what I did, I think it was somewhere around here. It was somewhere around here. Then I actually placed my buy. This was actually a buy limit. Yeah, I placed this buy limit, but what happened is that I placed a buy. I mean, I just placed this tool. I wanted to see how this market will actually play out. Normally, it can do this, and then before it committed, because remember, it can actually come all the way to this level to give us a double bottom before it goes to the upside. But now I was also observing this. I was also no, it was not here, it was here actually. I placed the limit somewhere around here, and the reason why I placed it here, I placed it there, is because I saw this market was creating higher highs. All right, is it no higher lows, sorry, because this is a yes, I was looking at these higher lows. Is it? Yeah, because these are higher
lows.
Yeah, these are higher lows. I was looking at these higher lows. All right, so what I did is that I placed this trend line over here, then I placed my limit somewhere here. Sorry, let me show you where I placed the limit, where actually I got triggered in. It was there, that this candle here, if you can see this retrace candle over there. Yeah. Now, why did I place my stop loss here and not here? What was the reason? Is because I saw these higher lows, right? So I made sure that my stop loss was somewhere above this low. So if I place a zone over here, you can see that my stop loss is just below this low. I didn't want to place, I felt this is a bit too big, especially for gold. This is too big. So, and then since the market had given me a higher low, I said, oh, let me place my stop loss just below this trend line and below this low over here. Of course, I didn't want to place it too close because I wanted to give market enough space to breathe. So my entry was here, and then I left it to just, and then I actually forgot to come and check out that trade. I didn't come to check the trade again. And do you know what happened? This was actually the NFP. Yeah, it was the Friday for the NFP. So of course I thought that, this thing is to just consolidate. Where I could have comfortably entered my entry, maybe it was somewhere around here. Then it could have been a what? A very clean, sort of like, a clean flag. And then maybe also it could have given me a clean double bottom before I go to the upside. But now, well, I left it. It is what it is. Look at what happened during NFP. The first move.
Wow.
The first move was these two candlesticks. 1, 2. And then what happened? It broke that high.
Wow.
Now I think it did some small retest. Yeah, you can see. You can see once it broke here, it did some sort of retest, and then it went. Look, and the market never came back. And it continued going and going. Of course, if I go to the daily time frame, you can see there was this high, and there was this high, and there's this last high over here, of which I'm suspecting it might come all the way to there. What happened? I missed the trade, no problem, but you can see so far the trade has played 48.6%.
Wow.
This was one of the biggest wins. So even if maybe you have exited here, it's still at 5%. Even if you have exited here, 16%. I mean, every move was massive. Even this one was 7%. Just here, 7%. So it's actually, the point I was trying to make is that sometimes, the market can just,
cannot wait for you.
Cannot wait for you. You can play. Then you are saying that, look, I want you to come and retest this level. Then I enter. Then it just goes. So now risk management comes in. You enter. If it hits your stop loss, you have only lost 1%. Then you can actually look and just continue to see, where you went wrong and stuff like that. Yeah. So, yeah. Well, it happens, but you thank God that you are right.
Yeah.
Yeah.
It happens.
Yeah, it happens, and you are like, oh my God,
Sometimes it goes without you.
Yeah. Then you just say that, look, I've missed a whole 45%. Do you know what 45% means?
Hey. If you're in a prop firm, if you're in a funded account,
yeah. Can you imagine? Yeah. Even if you risked $50, may say you are even doing the $5,000.
Yeah.
That's $2,250.
Oh yeah.
So we don't want to talk about if you are doing a 2K. If you are doing a 200,000 account, that's 100,000 profit. Yeah. So anyway, it is well. So AUD card, it's clear. I don't know why the rest of the people are quiet. Look, this is not a masterclass. It's just discussing the charts.
It's just discussion, yes. Just discussion.
So
I've noticed, but I've also noticed that AUD card and AUD USD, like they moves in a similar manner. I don't know.
AUD card and AUD USD, eh?
Yeah.
Okay.
I've noticed something like that. Maybe, I don't know, maybe it was just last week or no, I don't know.
Okay, we can check that. But I've also noticed, one thing I've also noticed is odd CHF and odd JPY. Hey, they follow each other like something. If you look at their structures, when one is buying, another one is also buying. When one is doing this,
like card JPY and card CHF.
Yeah. Even I noticed even GBP JPY and Euro JPY. Yeah. Okay. All right. So let's look at so these two, I'm looking at them keenly. Or AUD card and an SD card. You can see that is the same thing. An SD card. Let me start from the daily time frame. So from the daily time frame, you can see that we had this move to the upside, and then I want to show you the structure. This is actually the structure on the, let me take this one out so that you can be able to see it clearly. So this is a structure that I saw on NSD card, and of course if you start with the confluences, we have 1, 2 and 3 touches. And the reason why I have this trend line over here is because of this. I don't want to ignore this high. These are very sensitive area in the market, whereby we saw the market being rejected and moving to the downside. Then when you go to the 1 hour time frame, you can see that we had an impulse move. First of all, we had this high test candle, a very strong retracement. Then after the impulse move, we had our first flag, of which actually I missed at that, And you see it clearly maybe when you go to the 4-hour time, to the 15 minutes time frame. You can see it's a very clean, fast flag. And furthermore, if you come here, you can see that if I draw this, you can see the multi-touch confirmation. You can see 1, 2, and 3. All right. So it means that once again, the discussion on the risk entries and the reduced risk entry, this is where also you can still apply them. Okay, let me just draw this nicely so you can see. So I want you to see that. So we had this touch over here, we had another touch over here, then you had another touch over here, or which means that you could have actually entered on this rejection here. You could have entered here. Let's see if it could have made sense to enter somewhere around when this candlestick closes. Enter there about your stop loss just above there around 15 pips. 15 pips stop loss is okay. Yeah. Then of course you can target the trend line first, or this level over there, or maybe the trend line is around 9.3%, and currently to be playing around 5%. Now if you didn't catch that, or you're a bit conservative, you're a conservative type, you could have put it below here so that it triggers you at the breakout. Like we say now, this is a reduced risk entry at the breakout. Of course, you don't want to put your stop loss somewhere around there, because that one, the market can just retest this way and take you out. You'll be taking unnecessary losses. And also you can see that that's around 14 pips. So still my stop loss will be somewhere around the up there, which is around 22 pips thereabout, and we are looking at a 3%. But of course we missed that. So of course after the first move, we are looking for our first flag, and now you can see this flag, how it looks like. It doesn't look like the other one. It's not steep, it's a bit flat. I don't know if you guys can see that. It's a flat, it's sort of flattish, is it? And of course it gave us a scoop over here, and we had a clean double top. So of course you could have either entered, so of course you could have entered this here, a risk entry, another risk entry. You could have entered there, place your stop loss 15 pips. Well, you can go below that, but well, look, I don't want to be too this thing. So maybe you could have entered somewhere around there. Currently you'll be in 3.7 profit, or you could have placed your sell stop. Is it sell stop? Yes. Then you have your stop loss there around 24 pips. Then you're targeting to the downside. But of course we missed that. Then we had another chance of coming in. What happened? After the breakout, we had a retest. So this is an early entry, of course. Because normally one of the things I've noticed through backtesting is I've noticed that the market normally comes to test this level. Anytime you see some level like a high here, I can promise you normally the market comes to that level. So you can wait for it here. Of course, your stop loss somewhere around there, then you go to the downside. But you can see that this one, it was an early entry somewhere around here. We had one move to the up, and then of course it played out inside. And then wait, before I carry on, you can see that we've actually I was looking to observe it's going to break this low, which it has broken, and now it is retesting. So it might actually give us now a bigger flag. Normally after the first flag, we are looking for now a bigger flag before now it commits to the downside. So what is currently happening is this is a trade also that you can actually manage. And what are we looking for? You can target this level over here, which is around 4.91, or we could target this low over here, which is around 6% thereabout. Yeah. So NSD card and AUD card, I'm seeing them moving in the same direction. So let me show you another pair. NSD USD. I don't know. Well, This is also another one. I don't know how, but well, this one, there are two ways about, because of how the dollar index looks like. I'm not quite sure, but well, I'm seeing I mean, we've come to this level over here. Of course, we had a clean double top, and also below here we've had a triple sort of like a triple top over there. So, and if you go to the 1 hour time frame, you can see that this is what I'm talking about. So if I make this into a zone, then you can see that we are actually we are actually like, you know, we had a move to the downside, then we came to whatever. So there are two ways about it. If it's actually, it could do this and, you know, just go down, or this could actually be some sort of like a continuation pattern, which it could come back either maybe to this level, give us a double whatever, double bottom, and then continue to the upside. So well, I'm looking for selling opportunities, but you see, if I look at the dollar index, the dollar index seems to be like, you know, as if it's going to continue to this downside to complete the 90% rule. So I'm not quite sure about it, but it's part of my watch list. I'm watching it, but you can actually share your thoughts. If not, we can just move on. Well, all right. So this one I'm still not quite sure, even though it's on a high probability level because of this double double top. I mean, yeah, double top. Yeah, it could actually, and then also we have this 1, 2, 3. You know, triple top over there. But you see, also the thing is that, you know, this thing could just come all the way to this level. If it goes the opposite, it could, if this is just a flag, so you had an impulse move correction, it could just continue to this level over here before we see the move to the downside. So that's what I'm looking at. Anyway, let's go. So USD ZAR, I don't know if people, you normally trade this USD ZAR kind of pair, but well, I like it because these are those pairs that, even though they are whatever, they can really pay. But you can see that we had a clean we had an impulse move, then we had a correction, and you can see that we had a correction, then we had a breakout and retest. So I'm actually looking forward to this pair, you know, just completing this thing to this level over here. So this is actually my target. Of course, you can take profits here, you can take profits over there and stuff like that. And also if you I mean, for support and resistance traders, you can see that this was a support broken. It was acting as a resistance. The market has broken and is retesting, then now it's acting as support. So therefore I'm actually looking for entries to the upside. So this is, you can look for entries on this one. You can go maybe to lower time frame and maybe look for entries. Yeah, because if you look at this, something like that, you know, so maybe you can wait for breakout and retest to go to the upside, or you can wait for it to come down and give you a double bottom before you can move to the upside. So that's what I'm looking at on what is it called, on USD ZAR. On USD ZAR, I don't know, a lot of people don't trade it, so I don't want to waste a lot of time on it. Yeah, I think the rest of the pairs, they are quite not very much confirmed. Let's look. This one I was looking to see if it's gonna sell from this level. Is actually broken out. Let me take this out. Let's see. This is another one. You see, for example, like this card CHF, this is very clean. Yeah, so there's an impulse move, there is correction, there is actually a continuation. So of course, from the 1 hour time frame, you can see it's actually already broken out. But what we can do is that you can place your zone over there and wait for a retest. If it comes back you know, to pick you. Maybe you can place your stop loss somewhere around there, around 22 pips. Then target this level over here, 6.5. So of course you can take profits along the way. You can take profits here. This is a level you can take profits. You know, you can be taking profits along the way, all the way to this level over there. So this is this one should come around here, close to the top, because it's a high probability it could come. So for this one, I wouldn't want to chase it, because you see, if I place your entry here, then your stop loss becomes very big. So rather, why don't you rather wait for it to do what? To retest before it continues to the upside. And you can see it's a clean, if you go to the daily time frame, maybe from the weekly time frame, you can see that we are actually coming from a double bottom, sorry. You can see that we are coming from, this is a weekly time frame, so it's very strong. You're coming from a double bottom. Then we had our impulse move. Let's go to 4 hours. Then we had our impulse move correction. Definitely we are looking for a continuation. So this is something that you can add to your watch list. Wait for a retest at around 67,832, around there, thereabout, and then continue. Of course, you could have placed earlier on, you could have placed your buy stop here, because you know it can actually go and not come back. Then you could be happy, but now since it has already gone, there's no point to chase it. Just wait for it to retest, then we move to the upside. Yeah, any comments, any thoughts? Euro NSD.
Ilikuwa buys kidogo leo scalping.
Okay, so Euro NSD, you're looking for sales. Okay, are you looking for sales now, or you're looking for sales
maybe kesho? Nangojanga ile confirmation. Wana trade na ICT mimi.
Oh, because mimi kama ni sales, I would wait for them somewhere around there. Well,
Na ingoja probably kesho.
Yeah,
Kesho London.
Yeah. I don't know your confluences, but for if I was to trade this pair, I would wait for my sales somewhere around there. Then that. Then also you can see that it's given out. It will give us a clean M formation, yeah. Of which it might not go all the way, because this one, you can see that, yeah, it's almost like it's trying to break that level. But I wouldn't use that as a confluence. I want to look at a place where maybe the market was, even if it has broken, of course, like you're saying, you can scalp these buys. Sindio? Let's see how many people
Buys.
So yeah, around 98 pips, around 100 pips, yeah. Once it gives us a clear, because you can see that it has actually broken out. Well, if you trade these trend lines, you can see that it's actually broken out. So maybe we could hit these buys to this level before we, if it confirms the sells, then then we can we can now because also you see we are coming from an area of a double bottom. We are coming from this. We have this double bottom over here. Impulse move correction, impulse move. There's actually a breakout, so we want to see this one, how it plays out before we carry on. Let's look at the 15 minutes time frame. Yeah, hey, it has actually broken out. Yeah, so this one is, it could actually continue, because this one inaweza endelea hivi to this level before we look for the sells, or it could still move kabisa to this, either to this level, or even to up here huku juu kabisa before, or this could actually be just a fake out, yeah.
Itoe watu then irudi.
Yeah, because pia unaona kuna hii high. Let me take this trend line. You see, we have to, I normally say we have to deal with the probable versus the possible. What is the probability and what is the possibility? Because there's also another high here. Have you seen this high over here? So we yeah. This is also another high of which, you know, the market could just, you know, just trickle all the way to the downside. So we just have to watch and see how it is gonna play out. But for me, I can't see any, based on how I trade, I can't see any confirmation for me to enter the sells.
Sasa hivi bado.
Yeah.
Bado ni ngoja tu.
Naona mi kitu naona actually naona ime break out. Naona ime break out your trend line. Na
Kwangu bado ngoja 72.5 iki break hapo then najana nayo
72.5
1.7
725 hapa. Yes, actually this
iki break up
there. So we can actually get this buys to there, or it could go that's what as a probability on Euro NSD. Two ways, or it can come back inside and
ishuke.
Ishuke.
Haita hold yani, kama ita hold. As in kama hiyo zone ita hold. Yeah.
All right, men and brethren, I think we can call it a day over there. We have some pairs to look at, so we can't look at everything, but I'm saying that AUD card, you can look for sells. NSD card, you can also look for sells. Card CHF, you can wait for a retest. Then you can see, you can wait for a retest, then we go in. Your stop loss can be there, or your stop loss can be somewhere around there, still okay. We can look for buys. Then I think also USD we can wait for it to see if it can come and pick us down here, because based on this, you're almost like at the level whereby it can reverse before it commits itself, or it can actually come all the way to give us something like this, something like you know, a clean flag like that before, you know, before it actually commits itself to the upside. So at least we have this AUD card, NSD card, and also with the card news coming on Wednesday.
Kesho bro, nimepata correction tomorrow bro.
Tomorrow 3. Yeah. Card CPI 3:30 p.m. Tomorrow something is happening, so you can see. So tomorrow it could be that maybe it's just consolidating now, then tomorrow this one, tomorrow at 3 it could just move to the, hey, where did you go to? I was looking for you.
I'm back.
Yeah, so it could just continue. So let's see how it goes. But NSD card, I think you can, it has actually broken. It's creating lower lows. You can see it's a lower low and lower high. So it's creating another lower low, you know, and maybe it could get another lower high like that. It could just continue like that. But I'm actually looking to short these pairs. And also card CHF, like I have said, from this, from a higher time frame, from the weekly time frame, you can see that we are coming from a clean double bottom. Then we had an impulse move and correction. So of course we've already broken this out, So maybe we can wait for a retest and see. We don't want to chase this. We don't want to chase this. I don't know if you do this. I mean, this is too much. I mean, 71 pips is too much. Rather, we can wait for it, maybe to see if it's going to retest. Then maybe place our stop loss somewhere around below this low over here. I mean, around 28, 25, there about 27. It's not badly off. Then we see if we can catch this move. So for card CHF as well, I can say that I'm looking for a retest then to the upside, of which we're actually inside a bigger structure. If you look at it very well, we are actually on a descending structure, so this could actually continue to this level. It could continue to this level and like that. I mean, that's a long term move. That's a long term move. Then NSD USD also, I'm not very sure. I want to observe it because of the dollar index, but I was looking for sales because of these levels over here. Very strong double bottom over here and a triple top. But I know there are two ways: the probable and the possible. This could also be a flag, and then this could come and continue. Yeah. Yes.
Yeah.
Yeah, and it's because of this. Well, I know some people don't use the XY here, but look, I'm seeing the dollar index. It has broken this low, so it could actually come down to complete the 90% rule. Yeah, so if it does that, then we are looking for, if the dollar index continues, then NSD USD will go the opposite direction. But if this is a fake out of this low, this is just not fake out. If this is mass psychology and the dollar index just goes back, then we are looking for massive sells. Then finally we have USD ZAR. USD ZAR, we had we had an impulse move correction. Let's take this one out. So we had an impulse move, very clean breakout. Hey, we had a breakout and retest. So we want to see, maybe because that's too big of a stop loss. You see, 1% doesn't make sense. So you want to see if we can come back and maybe give us some sort of like a double bottom before we are interested in this pair. Maybe your stop loss can be somewhere around there. Then it's a clean 5.13%. So that is what I'll be looking at this week on those particular pairs. All right. Any other thing? Any question? Any contributions?
Eagle-Eye?
Yes.
You can look at Euro Pound.
Euro Pound.
Euro Pound.
Euro GBP. Euro GBP. Okay, this is a trade that I took last week. It's still playing out. I'm actually not even interested in this pair. I took my entries here and another entry over here. But okay, well, it's actually on a level. I don't know. Maybe you can look for sales. Let's see how many. Yeah, it's around 40 pips. Maybe you can scalp this one because of the 90%. The big moves were last week. Was it last week? Let's lock this.
Yeah.
The big moves were last week because you can see that we had this. I mean, this was actually a steep flag, but it actually played out. Yeah, but it was because of this double top, is it? But also the entry was here. Let me show you where the entry was. The entry was the entry was on 5 minutes. Hey, Charlie, this one.
Hey.
This one was really fine-tuning it. Yeah, that was the entry. Let's lock this. Yeah, that was the entry. You can see, it was a very clean flag. Small breakout. The first flag after the breakout. Breakout first flag.
Yeah.
So that's why the entry was here. And the stop loss over there, very far. But look at the pips. 12 pips. So it was a clean one, but well, if you actually had missed that one, then there was a second flag. Now this was very clear. So this was a risk entry that I entered, and give us it was 14.8, close to 15 pips. Yeah. So this was a risk entry, and it's because of 1, 2, 3, 4 touches. And also, if you go to the 1 hour time frame, you can see what I was talking about. You see 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, this is very. It was enough, because normally we're looking for 6 to 8. But you can see this is almost like 15 or almost to, I don't know how many hours. So it is actually played out. It has moved. So here, as at now, it is in a level that I will not be interested. Now, let me show you something. Maybe as we close. Once, where I normally look for entries, assuming this is the structure, and the opposite is true. This is something I've learned, and I want to show you something. So let's say normally the target is here. So what happens, there are 3 levels. We have the first level over here. We have the first level. Okay, the market is not this perfect, but let's just assume it was a clean. We have that first level over there. We have a second level over here. Okay, I want to show you something. Let me clone that and bring it somewhere around there, and then finally there's this. So what I wanted to say is, let's call this green, let's call this what, that, and let's call this red, Mr. Red. This one we can call it what, it's amber. Oh yeah, that. So these are the 3 levels. Normally when I'm trading, so the green area, so this is the level that, you know, I'm mostly looking for those high probability setups, my go-to setups there. I normally look for them. If structure wise, you know, the market is somewhere around here, then I'm so much interested in the entries over here. All right, because now this is now the level whereby, you know, the level whereby we find the first flag. You know, you see there's a flag over here that you are trading. You know, there's an impulse move, there is a flat flag over here, you are trading it. Normally here it really plays out. Now the second part is this level over here. Well, I might look for entries over here, but now I've noticed that this is the level whereby we get now the bigger correction. All right, that's the level we get, the bigger correction before the market plays out, of which you can enter here, it takes you out. I mean, it goes 1-2%, takes you out. You enter, it goes 2%, takes you out. Either it takes you out on loss or it takes you out on break even. So, or also for us who trade Falcon, this is a level whereby, you know, we see the Falcon flag forming. You know, this is a level whereby you see the Falcon flag, or the level whereby we see the what? This is also the level whereby we see the hover like this. You know, that's the level we see the hover, and then you can trade this or like that. Now, this level over here, this one, normally I don't like trading here. Well, you could get this, and it could play out. I can show you a trade on USD, I think CHF. It could play out, but for me, this is a danger zone, simply because the market could easily reverse. So now looking at this Euro GBP, let me delete there. I hope that is clear. Now looking at this Euro GBP here, you can see that if I go back to the trade, okay, assuming this is the playground, then you can see that this will be my, if this is the, oh sorry, if this is my playground inside here, this is my playground here, then it means that this is my first level, okay, this is my second level, and then this becomes my third level. So quickly let me make this green, and then I make this to be red. So what does it mean? So you can see my first flag was here, my second flag was, you know, either if it was a risk entry, it was in the green area. If it was a reduced risk entry, it was in the amber area, whereby the market went and actually came to give a retest, and gave me a double top before it continued. Now, the other place is the red part. Oh no, this red part here. You know, now this is very risky because two things. Already my 90%, if this was a structure like this, my 90% has actually already been hit. So what could happen is market could actually, you know, give us this and then just reverse to the upside. So the question you should be asking yourself is, am I in the green area, am I in the amber area, or am I in the red area? And that's the reason why I'm saying that even though this could actually be a structure and it could break down and play out, but basically this is more of scalping, because if you look at the move from here up here to down here, we're looking at a possible, we're looking at 162 pips. If you look at also this one, is also not bad, it's around 143. But if you look at this one, it's around 40 pips. So unless you are really scalping, then you can take that. But for me, I will not be interested in trades once I get into this red area like that. Normally I'm interested in here where I get my flat flags and, you know, this kind of flags, or here whereby I get a bigger correction. But here for me is actually a danger place. But depending on the strategy, this is concerning, this is about our strategy. Depending on what strategy you are trading, then of course you can, and you can actually get you can get a good whatever, because let's assume you catch a sell here, maybe you have your stop loss above somewhere there, you can see you can catch almost what, 6%. Yeah, but that's my kind of style.
So how do you define the red, amber, and red areas as the market is forming?
No, see, I have to see the structure first. You see, for example, like this is a descending structure, yeah? Mm-hmm. This is a descending structure. So definitely, this becomes my green area. So once the structure has formed, and let's say I've seen 1, 2, 3, I have to see my multi-touch confirmation. Yes, once I see my 3, then this becomes my green area. Then this at the middle here becomes my amber, and then of course on top here it becomes my what? It becomes my red.
In terms of the buys now.
Yes. So you can see here, if I go to, this is 4 hours. If I go to the lower time frame, you see here there was a flag here. Let's peep into that and see if what we are saying is true. Maybe we can even go further to the 15 minutes time frame, and you can see that. Now remember, the flag can be facing up, it can be facing down. It doesn't matter, as long as after our first impulse move, yeah, this could be a flag over here. You can see a small flag here, or this one. You can see this structure over there. That's actually, now remember, after the impulse move, the flag could be facing this way, or the flag could be facing this way. It doesn't matter, as long as we are looking at it at the green area. It could be facing anywhere. So definitely then you can see that from this, let me go back to the 4 hour time frame. You can see that then we had our, after this impulse move, we had a place where we could have entered our entries, where we could have entered our buys. Now then we had a very strong move to the upside. Then we had this, which could have entered, we had a bigger correction, or which could have still entered another buy over there. But now when we got here, then becomes a danger zone. If you could have entered the buys here, then you could have seen that your account could have just been blown like that, because the sells were just very massive. And also you can see that we are on a double top, yeah. Yeah, so that is how I normally look at it. But you can do back testing on it, and then you draw the areas. Maybe you can use the bar replay, the replay tool, yeah. Then you draw the, once you see the 1 2 3, or yeah, once you see the 1 2 3 touches, then you draw the green, amber and red zone. Then you start now playing it out, and then you put your entries and your stop loss, and then do back testing, and then you'll see how it actually works out.
Thanks a lot.
Okay, so all right, I think we can close there. That has been quite something. So yeah, so let's meet another time, but let's see how tomorrow this is gonna play out. OD card, NSD card, and card CHF. So it means that you see this half card. So if this one plays sell, then this one is going to play a massive buy. And then we see how this one goes. So yeah. So once maybe I get a confirmation or anything, I'm sure we can share it on the group. And then if you agree with the setup, then you can flow with it. All right. So guys, have a good night.
Thank you for this.
You're welcome. You're welcome. You're welcome.
Hello, thanks. Good night.
Okay, good night. Good night. Okay, so thank you so much for being part of our today class, and yeah, I hope that you've gotten some value from the classes. So remember to show some love over there by liking this video, of course, and subscribing to our channel. All right, this is EagleEyeFX signing out.